Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 1258A and today's date is April 19th, 2017 and the title of the episode is Brace Yourself, the warning signs are getting darker. Now before I get started here, I just want to make an announcement. I placed an interview with Jason Burek on the X22 Report Spotlight YouTube channel. So if you just go over to YouTube and you type in X22 Report Spotlight, it should bring you right to the video. Or you can come over to the X22Report.com site, scroll down a little bit, look over to your right-hand side. You can play the video right there. Or you can go to newssentinel.com. Same thing, scroll down a little bit, look over to your right-hand side, and you can play the video right on the site. Let's get into the economic collapse financial news. Now we can see the market, well, it is down once again. Things are not looking good right now. We also see that gold was slammed for the second day in a row. Very interesting. And they went ahead and they dumped $3 billion of notional contracts, future contracts, ahead of the London fix. And what we're seeing right now, this is about 25,000 contracts dumped in a minute. And it failed, think about this for a second, it failed to keep the precious metal down. Gold then popped back up. Now, despite the second slam, we can see that trading in gold right now is near the highest in 5 months. This tells us something, that these slams, maybe they're not working as well as they wanted. Remember what I said. When we start to see gold being slammed down, and they're doing it multiple times, and maybe they'll be using larger contracts and a larger number of contracts to bring the gold down, and it doesn't stay down and they can't do it anymore, things are starting to break. And if we see gold start going up $50, $100 as they bring it down, well, that is your sign, because that tells you that it's going to be very difficult to purchase any type of gold or silver moving forward. Because things are going to really start getting out of whack. Will it happen the next day? No, but in the next couple of weeks, next month or so, you're going to see things rapidly change, and it will become different. Now, I think about Cliff High when he says that silver is going to, pop up, then it's going to be pushed back down, it's going to pop up again, and come August, it's really going to let loose. Well, I can see how this is all playing into that right now, and how we are definitely moving into that arena, which tells us that people need to get ready and prepared for what is coming. Now, Bix Weir is saying that silver is a better investment than gold. Now, many people can't afford an ounce of gold today. Many people can afford an ounce of silver. An ounce, and if silver is about $18, $19, $20, around that range. You can even afford half an ounce of silver or a quarter ounce of silver. I mean, if you go out to Starbucks or to Dunkin' Donuts or any of those places and you buy a cup of coffee, you can afford some silver. So we could see right now, you should be purchasing some silver. I purchase a lot more silver than gold. I don't even purchase an ounce of gold. I don't have that type of funds to purchase an ounce. So sometimes I'll purchase a quarter of gold. But most of the time I buy 1 ounce of silver because that's something that fits into my budget. And I've been doing this for quite a while. Those people who haven't been doing it, you need to start doing this now. Now, I don't sell silver. I don't sell gold. I don't sell anything, actually. But what you need to do is you need to go out and protect yourself. This is your insurance from when things go wrong. You need to have cash. You need to have silver. If you can afford gold, have gold. Don't be sitting there saying to yourself, you know something, I'm going to wait to see what happens when... He says that gold and silver, when they can't be slammed down anymore and they are slammed down and gold pops up $100, that's when I'm going to decide to go out and get as much as I possibly can. Well, at that time, it might be too late. You might be going to the different places saying, I would like, 100 coins. And they might say, well, we got 10. This is all you can have right now. Next time you go, they might say we have none. So you don't want to wait for that point in time. Now, we know that the central bank is the major problem. We can raise minimum wage. And remember, minimum wage was really meant for those individuals coming out of high school, those low-wage earners that were going to move ahead in life and get better jobs. It wasn't meant for the everyday person to live off of. But this is what they're trying to do. But throughout time, what we've seen is the minimum wage needs to continually move up, increase, because the value of the dollar decreases. But until we get rid of the central bank, this is never going to change. And actually, there was a study at Harvard, and this shocking discovery was made when a pair of researchers at Harvard Business School decided to analyze the impact of higher minimum wages in San Francisco on restaurant failures. Guess what happened? When they raised the minimum wage, restaurant failures went up. They went up by 4 to 10%. We can see already what's happening with the minimum wage with retail and fast food restaurants. They say, you know something, why should I pay $15 an hour? I'll just get a computer to do this, and I don't have to worry about anything. The computer's always there, not showing up late to work. I don't have to pay that person anymore, and this works out a lot better. So we can see this problem will never ever go away until we get rid of the central bank. Now, we're seeing a lot of indicators right now letting us know that things are rapidly declining. IBM right now, well, they went negative to the tune of negative 23.1%. Now, this is the lowest revenue in 15 years. This is the 20th consecutive quarter of declining sales. I mean, and we're seeing this with Caterpillar. We're seeing this with many, many corporations. And once this earnings period comes up, well, it's not going to look good. Now, there's a lot of ways that they can manipulate this with GAAP accounting, laying off individuals, buying back their own shares, but that is coming to an end. Because when you don't have the sales, and you don't have them for a very long time, you don't have the revenue, it doesn't really matter at that point. Things are going to completely change, and we're already seeing the change. We're getting more and more indicators that things are rapidly changing right now. I mean, think about it. Think about a year ago, 2 years ago, 3 years ago, when we talked about housing and retail, and we talked about how stores were closing and the holiday season wasn't that great, and the corporate media was trying to tell everyone that everything was fine. Obama was out there telling everyone everything that was fine, that we're in this incredible recovery, everything is incredible. But then we looked at stores and we saw, well, this store is closing, this store is laying off. And everyone said, oh, you're crazy, it's because of online sales. And then next year came, and then we saw more stores close, more people getting laid off. And they said, no, it's the weather, it's online sales. Well, here we are today. I mean, they're talking about 3,500 stores in the beginning of 2017. Even the corporate media is admitting that we have a retail problem. Remember, online sales is only a tenth of the sales. So their entire story has just fallen apart. The weather scenario has just fallen apart. What we've been tracking all along shows us that we were on the right track. People were losing jobs. People couldn't afford to go out and purchase the goods. They built too many stores. All of this is the problem. The central bank is the problem. And now with the automobile manufacturers, we knew they were channel stuffing the lots, producing cars, and they count sales as they channel stuff the lots, not when you purchase the car. And it looked like manufacturing was up, looked like sales were up. Well, things are starting to change rapidly once again. We see that Hertz and Avis, they've dumped about 400,000 vehicles per year into the used car market. And they operate fleets that are multiple times larger. And with used cars prices plunging, bondholders are starting to get slightly anxious about the collateral impact of writing down billions of dollars worth of capital assets. Now, debt issued by Hertz Global Holding and Avis Budget Group, which had traded at or above par in recent years, tumbled to new lows earlier this month, amid signs that used vehicle prices are dropping twice as much as expected. That's bad news for companies that collectively have to dispose of their vehicles. That's Hertz, Enterprise, Avis, and many others. And when we look at this, we can see this is going to be a complete disaster because we understand that there's a lot of leases that are coming due. J.D. Power is pointing out that a flood of lease returns has just started to push used car prices lower. And this is not going to be good for car sales. Morgan Stanley thinks it could spark a 50% decline in used car prices over the coming years. This is going to be a complete disaster. Now, in the housing market, things are rapidly deteriorating. Actually, in my area, I've just seen 3-4 houses go up for sale. And I've seen houses for sale for almost 6 months now, and no one is visiting them. When I look around the country, it is a complete disaster. Actually, U.S. mortgage applications are continually falling. Now, here's the real twist here. Even though interest rates in the mortgage realm have come down a little bit, even though the Fed is raising, they've ticked down a little bit, mortgage applications are still declining. This is not a good sign, because right now we are at a very low point for mortgage rates. When these shoot up, and they're going to shoot up, it's going to be a disaster, and the real estate market is going to come crashing down. Now, we know that Trump, well, he turned the tables on the Fed, where during his campaign, he said we need a very strong dollar and we need higher interest rates. He said lower interest rates were a complete disaster. And then he turned the tables on the Fed and said the actual opposite of this, because we could see what's happening right here. We have the central bank and the deep state. They want to collapse the economy, blame it on Trump. Trump is turning it around, and he is making his move to blame it on them. Trump understands that this economy can't move forward anymore. He realizes that just with his corporations, that there's a certain point in time where the country has to default. No matter how much more credit you take on, how much more money you borrow, it makes no difference. You need to wipe out the debt. You need to start over. And he realizes this right now. He understands that this has to be this way. He also understands that the central bank, they've already made their move. So he's making his move. Now, a lot of people think Mnuchin, well, he's part of Trump's team, and he picked him, and he's a Goldman Sachs player. He's not part of the team. Actually, he's going to be most likely someone that Trump is going to get rid of, but he needs him right now. He needed to take him on. Now, Mnuchin, he is saying that, no, Trump didn't say that he wants the dollar to fall. He wants the dollar to go up. No, Trump said he wants the dollar to fall. And he's trying to push his agenda for his certain crew, and Trump has other plans. All of this is smoke and mirrors and a game that is going on right now. This is what everyone needs to understand. Everything is not like it was. Things have changed. And we're still looking at all these different indicators to see how Trump reacts to all of this. And it's just not Trump. There are individuals behind the scenes that are orchestrating all of this to set up the deep state, to get rid of the neocons, to get rid of those individuals in Congress. And that's draining the swamp. But you just can't come out and do it. I know people are like, well, you need to go in there and just say, listen, you're gone, you're gone, you're gone. Let's get rid of everyone. It doesn't work that way. I mean, we all wish it did, but these factions have embedded themselves into government for such a long time that you need to play the game and outsmart these individuals. And that is what is happening right now. Now, Larry Fink, CEO of BlackRock, he is saying that the economy, it looks like it's in trouble. He's saying that we see some rather dark warnings about the U.S. economy, saying there are signs of slowing as business weigh whether the Trump administration will be able to pass tax reform and an infrastructure program quickly. Among other things, Fink said, the warning signs are getting darker, and pointed to slowing auto sales, corporate M&A activity as evidence that the underlying economy may not be as healthy as the S&P returns would indicate. Well, of course it isn't. I mean, we've been looking at all this. We know that things are rapidly changing, and Trump is not going to get the tax cuts. He's not going to be able to reform all this until after the collapse. None of this is going to be done right now, because what we're seeing, and just from the first quarter GDP, the estimates right now, they're at, what, 0.5, 0.6%? This is absolutely awful. This is not a good reading. We already see that there are companies still laying off. They're not bringing back jobs. All of this is being set for later. Right now, you cannot do all of this the way it is. Just like a corporation who has so much debt, You just can't say, you know what we're going to do? We're going to add more people. It doesn't work that way. You can't do it. It doesn't work. You need to reset. You need to cancel out all of it and restart. And this is what is being planned right now. Now, Maduro out in Venezuela, well, almost 2 years ago, when Venezuela was cash-strapped, he quietly conducted its first little-noticed gold for cash swap with Citigroup. And he traded in the nation's gold reserves into at least $1 billion in cash, courtesy of the U.S. Bank. Well, he's back at it once again. He's in trouble. He needs cash. So what he's about to do is he's going to sell Venezuela's $7.7 billion in gold reserves to get U.S. dollars. And this gold that he's selling represents one of its most valuable assets in the country. Now, total foreign reserves stood at around $10.3 billion on Monday, near a 15-year low. And if he sells the $7.7 billion, he's really left with hardly anything at this point. And this is exactly what the neocons, the central bank, was trying to do. They were trying to make it so he can't stay in power. They've been trying to get rid of him for a very long time. Why? Because they understand that Venezuela has a lot of oil, just like the Middle East. They want the oil. They want the oil on the dollar. And they are squeezing Venezuela right now. And we can see that Maduro is doing whatever he possibly can to stay in power. But we can see right now, I don't know how long this is going to last. It might last for a little bit while longer, but eventually what's going to happen, he'll have no gold to sell, and they will force him out. But this might be a moot point right now, because we can see that the world is going through a major change where things are going to rapidly change and the economy is going to start to come down. And things are going to look very, very different. The landscape is going to change completely. This is why you need to be prepared and ready for what is about to happen. And that is a collapse of the economy. Not just the U.S. economy, the global economy. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.